So unless what you're talking about is high stakes, you are high status, and it is very novel, then you might be talking and they may seem like they're listening, but you're not accessing the part of their brain that can make a decision and become interested in what you're doing.
Welcome to the I Own It podcast with Ben Reinberg.
All right, we are live from the Ben Reinberg I Own It studios today in Laguna Beach, California. And I'm really excited for this guest to come on. I've been following him for a long time. And obviously being in commercial real estate for almost 3 decades, I can't even believe it. I'm getting old. This gentleman has been really someone that I started following a handful of years ago. And I read his book, and what an inspiration. And I get to talk to him live for hopefully a long time today, because we have a lot to go over. And stay tuned, buckle up, listen closely, because he's going to be dropping a lot of great knowledge today. Oren Klaff, welcome to the show. What a privilege, and thank you for joining us right before Labor Day weekend.
Ben, that was a very warm welcome. I'm excited to be part of this community. Are you sure you introduced the right guest? I'm not sure that's the right introduction for me, but it was very nice. I'll take it. But it was wonderful.
Well, I will tell you, your actions have spoken louder than words in your career. And what an incredible book. First of all, let me just tell everyone, if you haven't picked up this book and read it and you're in business, you're missing out. It's called Pitch Anything. He has other books as well and great teachings. Pitch Anything I've read a handful of times. I even read again this week because it just inspires me. Being in commercial real estate, when I started when I was 23 and I had to raise equity, if I knew what this gentleman knew, what he was teaching now, man, would I be lethal. But we're going to teach him some of the tricks that I've learned in my career, and we'll collaborate, and really
awesome.
Looking forward. So you have advised, Oren, millions of people through your books and coaching on how to convince others to buy what you're selling by deconstructing the sales pitch narrative in human psychology. Let's kick things off. I wanted to ask for you personally, what are your favorite types of stories to pitch?
Yeah, so I think we just got off a call with a real estate guy, and my absolute so look, what is a real estate pitch at its heart, right? It is the ability to generate alpha-like returns with a new mechanism that most of the market, and certainly the private equity, hedge, and institutionalized capital are unaware of, don't have access to. You've got an amount of time and a window to operate in which you can generate with high certainty alpha-like returns with capital. So that's the heart of a real estate pitch. Oh, you thought this was going to be a fun call? No, we're going to talk about microeconomics. So for me, my favorite narratives are one where there's a regulatory change that has opened up a window of opportunity where a small operator who's close to the ground in a metropolitan statistical area, that New York / San Francisco hedge fund that hasn't filtered up to their awareness yet, and they can operate within this regulatory change for a period of time and make money unfettered with a new finance mechanism in real estate. The second thing is the opportunity to get on a run. What that, I mean, the guys I've seen have made real money in real estate. I guess there's 2 ways, right? Is luck, okay? But either you're trading on very large assets that are complex, and you really got in there and understood the underwriting and the market dynamics, and you were able to raise capital and really build some marquee asset, or you learn how to set up pads for Starbucks. When Starbucks is in a major expansionary drive in that area, and you do 50 pads, in a row across 3 years. So the best stories are there's a regulatory change. I can, with a small amount of capital, generate alpha-like returns with high certainty, and I can get on a run and do it over and over and over again for the next 24 months. Now we have a story.
You're speaking sweet music to me. I love that. Absolutely. I totally agree with you. And it's especially now we're in the medical property space, which is a great market, and we're doing great, and we could add great alpha and great consistent, stable cash flows with upside. And so well said. I appreciate, but I found it fascinating, Oren, how you broke down 3 key regions of the brain that I wanted to talk to you. Obviously the croc brain, which is survival, the midbrain, which is social environment, and the neocortex, which is cognitive functioning capable of decision making. Explain to everyone in further detail, because a lot of people might have not read your books, how these regions connect with making a compelling sales pitch in your thoughts.
Sure. So you're going to get me in trouble with my publisher, because if I just read people the book without them buying it, they're going to call and complain.
I have a feeling. Hold on a second. I have a feeling book sales are going to spike after this one. They're going to hear how valuable you are. So go ahead.
Yeah. What I think most of the people within the sound of my voice really don't have a clear understanding of is when they start speaking or communicating or transferring information to another person. We believe that the format that we are spewing it out in is being received by the other person like a fax machine, right? So even if I'm not keeping track of myself, I'll do it like, this fax signal is going out, and I'm just expecting, because we live in a common culture, common language, common industry, have common terms, that their fax machine is going to turn on and is going to go do, 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 and the handshake is going to go green, and the information is going to go from my brain to their brain, right? And so when I had somebody explain it to me, like, what is happening really with the human mind, right? And so you go, hey, we've got an infill asset in which we've deployed, $3 million of equity. We're looking for another $1 million of equity to finish it up, and we're gonna step into $12 million of debt, stabilize the asset, and we'll have 12% ROI for the first 2 years, and then the thing becomes juicy in an exit scenario, and we get an 18% IRR on our exit analysis which is a 36-month hold. Completely reasonable, straight down the middle real estate premise, right? And so the other person is looking at us with their mental processing and not absorbing this information. Their brain, not their mind, their brain is literally going, somebody is talking. Is this something I should eat? Is this something I should fuck? Is this something I should kill? And it's kind of sounding like IRR, ROI, infill, California, build, debt. Kind of feels like something I should kill. So there's a part of their brain that is going, is this valuable to me? Is this important to me? Can I process this? Is this anything that could potentially impact my survival positively or negatively? Or should I ignore this? Right? And that is a brain function. That's a crocodile brain. Should I eat it? Should I kill it? Should I mate with it? So without recognition that part of the brain exists, when you start communicating with people, you're trying to hop over a couple parts of the brain that have to be calmed down before you can begin communicating with it. So the part of the brain you want to be talking to, as you said, is the cognitive cortex. The cognitive cortex is able to process math, language, information, decision-making, decision matrices, and that's the part of the brain that you want to go IRR, ROI, infill, 36-month hold, right? But you have to earn some access into that part of the brain, and you don't do it in the way that most people are doing it. So you got to get past this croc brain first and calm it down and say, this is not something that I need to be afraid of or have a survival response to. So that's pretty basic. People don't accept that. You can learn more about that. You can learn less about that. But I don't think anybody disagrees that there's a sort of survival response to people once they start talking. The second thing people don't understand is the midbrain. There's a middle part of the brain that determines status. And this is where everything gets confused and people lose traction. If I believe, Ben, that you are lower status than me and I have power over you, three things happen automatically, anatomically, which is I say, I do not see you as a whole person with meaning and respect and part of my integrated culture. I just see you transactionally. What can I get from Ben in this conversation? Secondly, if I believe I have power over you or I'm higher status than you and you are lower status than me, I take risks around you that I would not take around my superiors or my peers, right? So for example, what are those risks? So if I believe you're lower status than me and, hey Ben, can you hold on a second? This is my mom calling. She wants that recipe for the this Christmas cake that we make every year. And she's, hold on. Yeah. Hey mom. Yeah. So if somebody believes that they are higher status than you, then on your podcast, which you're investing in, putting time in, putting money in, they're taking calls about recipes, or from the car wash guy, right? So if they were at Bank of America applying for a $120 million piece of debt to complete an asset they're in, and their mom calls for the recipe on the Christmas cake, that goes to voicemail. They're not going to risk taking that call. So when people perceive that they're higher status, they take risks around you they would not take with their peers. And lastly, they view you superficially and not as someone with experience, expertise, and capability. So until you have established your status credentials and where you are in the pecking order, in the social order, and that you are a peer of the person you're talking to, you cannot enter any type of information exchange on the asset or the thing that you want to pitch. Now, I'll bring this home to a practical way, in modern deal making. Somebody will tell me, hey, I can, I'm working on a deal. It's a sports related deal. And they go, hey, I know Mark Cuban. I'm going to introduce you to Mark Cuban. 99 of 100 people go, fuck yeah. Right. And they go, it happened to me the other day. I have his phone number, right? I'm going to introduce you to Mark Cuban. And without understanding this midbrain concept and status, 99 of 100 people go, great. Please introduce me to Mark Cuban. I'd love to show him my deal. So, but what I said is no, do not, absolutely negative, denied. Do not introduce me to Mark Cuban. Why? Right? That's a great connect. Well, first I can get to Mark Cuban myself, but anyway, because I view this person as pretty low status, and I don't want that social introduction from somebody that I know Mark Cuban for sure sees low on the pecking order, right? If I want to introduce you to Mark Cuban, I want it from, whatever, Donald Trump, not from, Joe Low Respect. So understanding social hierarchy and status is absolutely critical before. So I'll just land the plane here. So the neocortex, the smart part of the brain that can actually understand what it is you're selling, it has a rule set which says if this person is low status, try and ignore this and don't assign resources to it. Number two, if I have solved this problem before, if it's not novel, try and just get out of this conversation. Don't pay attention to it and do not assign much resources to it. Or if it's super complicated and low priority, right, then don't assign resources to it. So the part of the brain that you want to talk to and the other person you're talking to has an enormous expenditure of resources. So unless what you're talking about is high stakes, you are high status, and it is very novel, then you might be talking and they may seem like they're listening, but you're not accessing the part of their brain that can make a decision and become interested in what you're doing. So, Ben, it was a very short question with a long answer, but I do think until people understand that, like, fuck it, you can't do anything else because no one is paying attention to your thing, no matter how good it is.
Yeah, I mean, and typically what we've seen in pitches is that you got to have discovery. So take commercial real estate as an example, which you understand, is you need to understand what are your goals as an investor. What's your portfolio look like? Why do you want to diversify and invest in, say, medical, or one of our niches we do? You really need to discover and understand what their goals and who they are as a person, because that builds that rapport to get you to the next, that they can feel safe. And you get past the crocodile brain, and then you go status. But then with your talking, building rapport and confidence, you should be able to get past the midbrain, and then you can get into, okay, this is how it works. We have 3 classes in this fund. So we talk about returns.
So I think on that, what I see young people doing, as you said, I've trained 80,000 young people from stage, on purpose or inadvertently. And the problem is they talk about, by the way, we have a new guy here, weather. If you hear talking about the weather, you're fired. Okay. So weather, so people go, hey, how's the weather where you are? Right. Or wow, that hurricane is, a lot of water came out of the sky. Oh, really, motherfucker? Water came out of the sky? Like, that's where it comes from. Either, there's no other way to get water. So yeah, the water did come out of the sky. We're in Florida. It happens all the time. So football, weather, politics, election cycle, news cycle over the weekend, celebrity, deaths, births, marriages, divorces. So all of these things are what young people do to fill time while they're looking to get a foothold and an understanding and some context of the relationship that they're starting to move into, right? And they feel like if there's engagement on some subject, and believe me, I love football, right? So you can talk to me about football, but where you're going is, if you're looking for status alignment or status increase, your knowledge of football is not going to do it because I'm in real estate finance. So I think when you say like discovery and rapport from through my lens, it's just really important to understand like rapport is not just meaningless conversation in which you are having banter about non sequitur and doing nothing to improve your capital markets status within the conversation. So I want to make that clarification around discovery, because I see so many young people feel like, hey, I'm in the conversation, we're talking about stuff, and nobody has called me, any names yet, so I'm doing well. And in fact, I would say you might even be lowering your status because, my time, if I'm jumping on a call, to talk about some commercial real estate deal is, I've got a family, I've got my own things going on, I've got to work out, I've got goals, I've got hobbies, my son's on a hockey team, I have all kinds of stuff to do. Debating weather with a 23-year-old is not something I've really allocated a bunch of time for today.
And it's so well said, because you really need to understand the product. And that's how you're going to build a rapport, because you're going to start off with your discovery, asking questions that are parallel to what you're about to sell. And that's really important. Oren, you talk a lot about the importance of social framing, which I love. And I believe many people intuitively know what framing is, but they're not fully conscious of it. Break down for us how you think about framing and how people can consciously become better at framing in social situations to their advantage.
Sure. I, unfortunately, have to speak to a lot of billionaires or people who manage billion-dollar funds or manage billions of dollars of AUM or investor capital, right? And guess what all of those people have is a dose of arrogance, superiority, high status, self-importance, and they are used to having the power frame and control over conversations, right? I've never gotten on the phone with a billionaire who has said, hey, I'm really, I looked you up. I'm really interested in, what you're up. So perfect example. I am speaking at a conference with Emmett Smith, right? Okay. Who is like,
run Emmett, run, as we say.
Run Emmett, run. Like for me, like American football is epitomized by Emmett Smith, right? I think it was University of Miami. You hand him the ball. He ran for 99 yards the first time he ever touched the ball, but then went to the Dallas Cowboys and like 5-time MVP, was this MVP of the player, of the Super Bowl, multiple Super Bowls with America's team, the Dallas Cowboys, still the most valuable sports franchise, in the world. He had a long career, as a running back, which is a ground and pound position in true American football when it was really, Dick Butkus, post Dick Butkus, but pre, you're not allowed to hit anybody, and it's flag football. And that is just like epitomize America. So the conference organizers go, hey, you're going to be having lunch with Emmett Smith, right? I'm like, this is amazing. I have a picture of like his badge next to my badge. I don't have an entourage, but I'm walking back to the room there, and Emmett Smith is coming down, and he's got a whole entourage of people around him. And this he's already retired from football then. And I'm a 40-year-old white guy, of which he has 10 million Oren Klaff, fans. And so we get back into the break room, right? And so his entourage is split off because the deal is I'm just going to have a 20-minute lunch with Emmett Smith. And the conference organizer is there. It's like, hey, I'm going to leave you guys alone. You can have lunch and everything, but I just want to introduce you to. And I go, oh my God, this is amazing. He's like, I go, it's a dream come true, right? I never ever thought I would actually ever get to meet Warren Moon, right? And who's another African American quarterback, a football player from that same era. And he goes, oh, I ain't Moon. I'm like, really? Who are you? Right? He's like, I'm Emmett Smith. I'm like, really? That sounds familiar. What do you do? Like, you're a speaker, real estate, sport. Like, I'm Emmett Smith. I'm like from the Dallas Cowboys. I'm like, I don't know. It sounds familiar. Oh yeah. It's coming back to me now, right? And the conference organizer is like crazy. So that is frame control, because Emmett Smith is never going to pay one atom of attention to Oren Klaff, white middle-aged fanboy, of which he has millions, and maybe rightly so, because he has to, defend. But we're in a room together, having lunch for 20 minutes, speaking in the same conference, right? Guy could have, so anyway, he's like, fine, sits down, and he's still ignoring me. So Ben, I never got off of him, right? For a second. About 12 minutes in to the 20-minute lunch that we're having together, he goes, what'd you say your name was? Right? I'm like, yeah, I'm Oren Klaff. He goes, what do you do? Right? And I'm like, yes, that is frame control. Emmett Smith asked me what my name is and took some interest in what I do. And that ultimately is the heart of what frame control is. So when somebody come in and they're so socially proofed, they're so high up on the social ladder in comparison to you, and their frame is, I don't need to pay attention to this. I have complete power of this situation. This is not important to me. I can be dismissive of it. I'm just trying to get through it. And I'm completely transactional here. I want to eat my sandwich and move on. And that's their frame, right? And you can introduce a frame which says, no, like we're in a room together. Let's have some conversation about, our families and what we do and what our interests are on a mutual peer-based level. I don't care where you came from, what you did. We're in a room now sharing a sandwich. Let's treat each other humanistically. And that's my frame. Now, that doesn't have to be everybody's frame. That's not right, wrong, different. There's no law that says when you're having lunch with someone, you have to treat each other, humanistically and take an interest in what they do in their family. That's my frame. Emmett's frame is another 40-year-old fan white boy. How do I get out of this conversation as quickly as possible and reserve my brain power for A, my speech, B, my family, C, my true fans. And that's his frame. Nothing wrong with that. But these frames come together and collide. And on that day, my frame was the strongest. And for 8 minutes, Emmett and I had a very conversational, family, religion and health-based conversation, because my frame that day was stronger than his. That's frame control. So, wow. Hey, how do I apply that in my day-to-day? So we could take that all the way back to, these conversations. So I speak with billion-dollar cashed-up hedge funds, in private equity groups across a given year. I might speak to 2 or 3, billionaires. Unfortunately, I don't enjoy those conversations. But one thing that happens for sure, they always come with the power frame, right? I'm the most important person on this call. The things I say are more important than anything else on this call. The agenda is my agenda. While you're talking, if I think of something that I want to say on any subject whatsoever, from the best samosas in downtown Mumbai, how to mine copper on asteroids, or anything in between, I'm going to say it, and you're going to shut up and listen to me. That's their frame, right? So you cannot explain to someone that you're a peer of them or you're important. And what I'll do, the other thing about hedge fund or private equity guys that feel more important than you is they will always come to a call late, no matter what, right? It's just they're always running behind. I think I came to this call late, right? That says anything.
You'll be punished for it. Don't worry about it. I'll control the frame. I learned enough from you, but keep going.
I believe so. 100% of the time, right? I will say, Jim, are you here for the 2:04 call? Do you want me to catch you up on what happened on the 2:00 call? I don't. This is something you can do listening to this to get frame control. I know you're thinking like, I understand. Like somebody throws you in a room with Emmett Smith to run like full on geared up frame control is a skill set. But you can do that. The first time you do this, your mind will just be blown, because you will have people that are 17 levels above you on the societal pecking order, and also in terms of strength of their business and just capital, access to capital. Say, I'm sorry. The first thing they will say to you is, I'm sorry. I was running a few minutes behind. I should have called. Because everyone in our culture, in our society, in our system business understands the value of time, right? If it's a waitress, if it's a coffee barista, they know it's just, that time is important to everyone and you shouldn't take it away. And that's just the moral system codex that we work on in our society. So you say to those guys, hey, are you here for the 2:05 call? Let me catch you up on what happened in the 2:00 call. They would say, I'm so sorry. And then now you've started off a call with some understanding that we are peers. We have both allocated time to this meeting, and we're going to have a conversation that benefits both of us so easily and quickly. And by the way, in a fun way. So the problem with the word frame control is it has the word control over it, right? And so you're not controlling another person, but you're controlling the sandbox. And that ultimately,
you're controlling your mindset. I mean, you're controlling the scene. It's like your example, and I've done the same thing where we used to have conference rooms. You remember those days? They were always at the front of the office, and you go in the conference room. We'd have people come in, investors of ours, and then it would be a family, and the decision maker wasn't there, and I would walk in, and I was a young guy. I might be late 20s at the time, and I had a lot of balls when I was younger. I mean, I still do, but I was nuts when I was younger. And I would say, to that family, I'm like, you know what? We're going to end this meeting. And they're like, what are you talking about? You're like a 28-year-old kid. You're going to end this meeting. Isn't it a privilege to meet with us? We have hundreds of millions of dollars. We could deploy 10 million into your investment, the syndication. What, are you nuts? I said, decision maker's not here. I'm not sitting here without someone that makes a decision. It's a waste of time. And I walked out, and they said, hold on. They said, you know what? He's going to get coffee down at, I don't think there was Starbucks out at the time. Maybe they were coming on the scene. And he said, hold on, he'll be here in 5 minutes. I said, fine, I'm going back to my office and working. I said to my assistant, I said, let me know when he's here. I walked in, and that's exactly what I said. I said, do you always show up to meetings late or not available? He's like, what do you mean? I said, we're here for a meeting to make a decision about a great asset you can invest in. And I heard you're the decision maker. So we have a choice. Either we're going to sit down and discuss specifically the investment and how we can help you build wealth for you and your family, or this is not going to work. And we got him to invest. Exactly that point, that frame control. And it was funny, when I read your book, you had a similar situation. And I'm sure you've done this multiple times. I thought that's what connected me when I saw that.
So I think when people hear this, it can sound like a tactic, right? I do this every day, and I think you did that exactly correctly. My concern is that people would leave here, and go to a meeting, have a bunch, people in and say, hey, where's the decision maker, right? As a tactic, and not understand what's going on beneath it. So for me, you have to organize inside of yourself, like what you are willing to comport with. And for me, it's about opportunity and time. So if I go in and I don't have other opportunities, and this is really critical, I may say, hey, why don't I show you guys this? You try and get John and bring him in here. If you like what you know him better than I do. If you like what you're hearing, bring him in here and we can carry the conversation. So I wouldn't do that today because I have a lot of opportunity and I need to spend my time, so if I'm meeting in person, I need to spend my time with somebody who can make a decision, right? So, Yogi Berra said, when you come to a fork in the road, take it. I have to present that to people. So the way I'm able to do that, it is not a tactic for me, and I'm not scared of losing the account because I've got what I would say optionality. So the time that I could potentially waste here where there's no decision maker at the table, I could be spending over there with a decision maker. So all I'm doing is I'm bringing my actual reality over to them and saying, look, this is how my business works. And I can't have you change the way I run my business because you guys have something weird going on. And once you decide how your business works, then this isn't like a tactical gambit to control people. So that's why I'm saying, like, you can. I can control people. I'm good at this. I've been doing this for years. I can get and force people into a corner, back them into it, make them close, get some decision matrix on them, cramp it down, do hype and FOMO, and really take money out of their pockets with them unable to resist it. Because it's a training I have, is what I know, but there is no joy in doing that, controlling somebody else, right? What I'm controlling is the situation that I'm in that works for my business. So once you decide how your business works, and then you start to get yourself into territory that makes you uncomfortable, then there's no tactic. You can just go, hey guys, this is kind of weird and it's making me uncomfortable. Let me tell you how I work. If it works for you, we can do it that way. If you want to do it some other way, that's great, but you have to do it. Like, I don't have a way of doing it the way you want to do it. So let me show you how we work. If it works for you, let's get on the same timeline and make it happen, right? But if it doesn't work for you, just let me know and I can go on my merry way. I'm plenty busy and we can still be collegial, but this deal is probably not for us, right? So if that is true to you, right, and you've got other places of your time, then you can just say that. So there's a great show that I've seen a couple times called, this is the visualization I have on this, Ben. Look it up. It's a show called Hole in the Wall. Came out of Japan. See, that's if we had this hooked up, we would put a hole in the wall up on the wall, but we don't have it. So what you saw before is like right behind me is that's a 40-foot LED wall, that we can throw like whatever images to.
It's like a green screen. Let me ask you something. So basically, what you're telling everyone is have standards. The problem is when you're young, you got to build up your confidence to be able to adhere to those standards, and that's a tough road for some people.
But what I'm saying is, if it's just the way you run your business, right, then it's not about confidence. Then you're just I can't fucking run my business like that, right? Let me give you an example, and this example works really well for early stage tech companies. Okay. Which I've helped a lot of them get financed. This technology or this protocol that I'm talking about here works really well early. So they have an investor, and the investor is asking for information and talking to it, and they're like, "Yeah, I'm thinking about it." It's, hey, have you had any thoughts? Are you ready to go in? I need additional time to think about it, right? And say, "Look, Ben, this is a early stage tech company. We are raising $1 million, right? This is not a $300 million outdoor mall that we're building, right? In which we got to go into underwriting, and there's committee decisions, and you've got to get approvals, and you've got to go to your investor base, and there's an investment committee and layers of interns and junior associates and senior associates and long layers of underwriting. This is just $1 million, of which you are $250,000 into a who knows what the fuck technology company. Every single one of these funds like this, right? We meet and we talk about the idea for 1 week, and then the investor goes, "Yeah, that sounds great." The second week, we exchange some information and get you in the idea, do a little demo. The third week, we go, "Are you in or out?" And the fourth week, you wire. Okay? So if you are thinking, the problem here is, and here's the moral authority frame, right? You said to me, "Hey, I'm an investor in early stage companies." Great, we took you at face value. But your behavior is like you're a private equity group. Right? If you can't come into this deal in 30 days or 35 days, right? Let's just say it's confusing. You're calling yourself an early stage investor, not meaning to be critical, but you're not really operating on early stage investor timelines. So if you have, if you really are an early stage investor, you've been involved in these deals, you've come out of these deals, then you know what it's like, right? No early stage tech company is going to spend 3 months goofing around with someone for $250,000. So, real easy question. Does the timeline that we're on, which every single tech company, has for a sub $1 million funding, can you see yourself wiring on that time frame? Or you just see like you need more time and you're more leaning towards private equity, debt, hedge, or some other finance mechanism that we're not interested in? Like, tell me how we should work with you. That's frame control, right? Because I put them on a timeline that's normal. And then I might give them an out. I go, "Listen, maybe you're like a tweener, right? You need a little bit more time than a true, like a Paul Graham. Hey, I love the deal. Here's 25 grand or 250 grand. Let's roll. But you're not quite private equity and you need 6 weeks. I don't know. But tell me who you really are. Let's get rid of all the things you said, because none of that makes sense to me anymore because of this nonsense we're in. Tell me who you really are, and we can figure out what we should be doing together."
So two of your
that's
adages,
frame control.
I love that. Love it. Two of your adages are people want what they can't have, and people chase what moves away from them. You must have been great at picking up chicks, by the way, when you were younger. But I loved to have been hanging out with you when we were younger. But I think most people can appreciate the wisdom there, but may not understand how to incorporate it or into their sales pitch.
So here,
so like share some examples of how to use those principles to be more compelling.
People want what they can't have.
Right.
Most of the people listening to this, if they walked in here walked in the studio and we said, pitch me your deal, right? They're going to say, this is what we have. Are you interested? Some short version of that. Okay. And it is in diametrically opposition to the first rule of selling financial deals, which is you can only attract people to the deal. It's not sales, right? If you're raising money, it is not sales. Sales has a value proposition. So for sales, there's a value proposition, right? Again, like, hey, your copier keeps jamming, you can't get your PPMs out. We have the latest, Epsom X359,000. It's only $999 a month, and it will never fail. You'll be able to get your PPMs out, and it will lower your cost of copying, and you'll never have a jam again, right? Oh, great. That sounds good. Like, can we finance it? Yeah, sure. And 2 months free. So that's sales, which has a value proposition. For capital, you can only attract people, right? And in order to attract people, you have to intrigue them with something, with hype, and then you have to engage FOMO, which is fear of missing out. So I will boil this down. Like, if you hear one of our pitches, about 70% of the way through, the investor discovers what it is. In your pitch, about 0.5% of the way through, you're like, you just dump it out on the table and go, this is what we have. This is the return you'll get. Do you have any questions? There's your whole pitch, right? So 3 minutes into it, there's no longer any need for me to be in this meeting. And I'm sorry I came to it to the first place. So people want what they can't have. You have to intrigue them about something, right? And then you have to show a little bit of it to them, get them excited about it, and start pulling it away. And that is the finesse nuance of really selling a deal and attracting capital to a deal. So to land that plane, capital doesn't have a problem. It can just sit there and be capital, right? So it's not trying to fix a problem. So you can't sell anything to it. So the word sell, you can only attract capital to your deal. And so if you think about like a model that we would use now we're really starting to see how it all comes together. Before I can tell you what it is I have to establish my bona fides, my status, my credentials. Status, right? Secondly, before I tell you what it is I have to establish that I'm an expert in the area of finance that I'm going to be talking to you about. Next, I have to tell you that I have an incredible solution in that box, but you cannot see what's in the box yet because you haven't earned I just don't feel like opening the box and showing it to you. My IP is in there. My deal is in there. Whole conversation in there. Pandora's box. It's over there. I have it, but we got to have some conversation about who you are before I'm willing to show you what I have in the box. And that's intrigue. And now we have frame control, right? Because I'm not just going to walk in here and sell you a deal. I don't know who the fuck you are. Like, sure, right? You are TPG. TPG, and there's a reframe for everybody of high status. TPG is an incredible firm, right? It has been for 30 years, right? It's also had, 15,000 people come through it, of which you are one, right? So yes, your bio has TPG on it. You went to Harvard. You know who else went to Harvard? Like 780,000 other people, which is amazing. And I am impressed and I give you credit, but I don't know what kind of investor you are, what your capital allocation is, what your timeline is, what your ability to re-up, what kind of deals you've been in recap or, scenarios or capital calls. I have no idea. Tell me a little bit how you invest, what you're invested in, what the outcomes have been, what you're looking for, and just how you behave as an investor. So I know if we should even invest the time to open up the box and show you the deal in it.
Qualifying is so important. One thing was interesting is I developed this concept a long time called the Birkin bag. One of my investors, she had these Birkin bags in her closet. And, you know how expensive they are. And I walked in and she was from New York and I walked in her closet and I said, what are all these? I've never seen. She said, well, they're Hermes. They're exclusive and rare. And I started thinking, I'm like, that's like our deals. And so that's how I sell the Birkin bag theory because it's exclusive, rare. And when you have that mindset, and I teach the guys that work for me and others about equity, is when you can step in with that confidence and know that your product is exclusive and rare, that's when you can start qualifying people. We have limited spots available.
How do you position your assets as exclusive and rare with a capital markets lens on them?
Well, because our experience and our leadership team, solutionary oriented, the product we buy, the high barriers to entry, to buy, say, medical properties, veterinary properties, understanding the different nuances of those products, how to underwrite property, how to manage, how to be able to have a great track record like we do over almost the 3 decades of mid-20s IRR on a conservative asset like that. So it then starts becoming more exclusive, because you can go and try to buy an asset, but the odds are you might lose your ass, because guess what? You have to understand all the nuances behind the medical property space. You have to understand how to underwrite it, the real estate fundamentals, how to finance it properly, flexibility in your financing, etc. So that becomes even more exclusive.
And why can't I just jump out of my chair and move into the submarkets that you operate in and start looking around for medical assets and just go, hey, if these things generate 20% IRRs, I look at your track record, right? And I say, hey, I've got some capital to deploy. Let me jump in this market, and I'll just offer. I'm willing, to go down 2 points on IRR, to be competitive as I nose into this market. And so that willingness to have a lower yield to get into the market, because I've got to deploy capital, makes me competitive against you. So why would I fail in that endeavor from the starting point I have now, sitting in this chair, and jumping up and going, hey, I want to go do this too?
Well, you have to know how to deal with tenants. You have to know how to manage properties. You have to be resource rich. You have to be responsive. You have the ability to pivot and move quickly when you have issues and challenges. Not everyone thinks real estate cash flows go like this and they ascend. No, they're like moguls. And so you need the ability to hold. You got to have enough reserves. You need to have the complete holistic package to create those type of returns. So even though you might pay a more aggressive price, well, guess what? What kind of financing are you putting on it? Let's say you put short-term debt on it, interest rates move. Look at the market we're in today, Oren. If you don't value it properly and protect yourself for the long haul, depending on what your investment strategy is, then you're going to lose money. When you invest with a company like Alliance, we're here to protect your company, and experience matters in this game. It's a marathon business. Experience matters. Knowing how to deal with the issues and the challenges that arise from owning commercial real estate, it's extremely important. It's not a get-rich-quick business. Cash flows change and go up and down. You have to create the ability to hold and know how to do that. And so if you're coming in and you're just going to deploy capital and you're not going to actively manage it and be in the market and understand and build resources and be able to have flexibility in your loans, it could cause issues where, you might be paying up and trying to be a man to be competitive, but
so this is awesome.
It's not going to serve you.
This is awesome. I mean, this is exactly what I was telling Camden, the young guys around here, right? You're not just going to wander into the real estate market and sort of generate rapid wealth when you're competing against Ben, what's the size of your team? 22, 28 people?
Mm-hmm.
So you got 28 people.
Mm-hmm.
Ben's been doing it for 30 years. Probably some of those people have been with you for 6, 7, 9 years. 15. You've got underwriting. You understand your local market. You have capital to deploy. You have an investor base. You've got a track record, which makes easy access to debt. The sellers know you, in your local market and your region, or can easily do diligence on you. So they trust you in a transaction and might, sell to you at a lower price for the certainty of close, right? And so you guys are not just going to wander into that market with all that strength and sort of buy an asset. And they're only generating 20% IRRs, right? And you guys want to get rich, quickly. And somebody who knows what they're doing is generating 20% IRRs. That's why I say you're not just going to wander off into real estate and knock it out of the park, because you're going to walk head on into these guys.
Well said. And so one of your companies you're a board member of is Substrata, which uses AI to interpret what buyers care about. And I'm really interested in talking to you about this. Share more about the kind of behavior cues that AI algorithm can identify to predict the intentions of buyers.
Yeah. So the founder of that company, Ori, super, super smart guy. I became friends with him. He came to one of my conferences and we really hooked up. And, he said, hey, if I could put like the orange brain inside of the AI, it would have more than just mathematical conclusions, to also have this soft science underneath it. And then on his side, he's probably sent out 200 million emails, to on a B2B business people and being able to see those responses. And so one thing we learned from sending out maybe 20 million emails together that is not immediately what I would say was counterintuitive is that people in a cold outreach email respond to serendipity, right? Some randomness of chance. So rather than, hey, I saw your name on LinkedIn, or I want to tell you about an offer that we have, or you look perfect for the offer, I've been wanting to, get in contact with you guys for a while. Much more powerful is like, hey, I've jumped in a meeting in a part of our company that I never go to, right? It just happened to be that I was out there and somebody mentioned your name. And randomly, I read an article on you a couple of weeks ago. I was like, ping, how am I hearing about this person twice? Right? And at the same time, I'm going to contact them. So people respond incredibly powerfully to that serendipity as opposed to value proposition. So we learned some things from doing so much value and just observing like what people are responding to. So then inside the AI, we put a serendipity measurement and saying like, how much did the recipient of this call feels like there's some randomness involved and they're not a target. And then we put a scale on it. And said, hey, this call is not going well because the other person doesn't feel like that, they feel targeted. And it's not it's got some randomness to it. And so it's got a low score. You need to try and make them feel like this is a little bit more coincidental and you are curious, which is the next thing we discovered. Like serendipity and curiosity work incredibly well together, and then the call is doing well. So that's some of the things we built into the AI at Substrata.
So you've heard thousands of investor pitches in your career, Oren. I'm curious, like, what do you personally find most compelling for investing money in? What floats your boat?
Change, right? We are at the center of the tectonic plates in our industry are moving, right? And we've been observing this change and tracking it. And now at this point, the tectonic plates have moved enough to create significant change in our market. And we have the technology, we have the assets, we have the resources, we have the insight, and we have the data to leverage the change in advance of anybody else. That is the thing, whether it's real estate, whether it's toilet paper, whether it's, single family residence, infill, coastal, Southern California, or, Midwest, multifamily, edge of town, community-based, multifamily real estate asset. If there's not an underlying change that person is an expert in, it's very hard for me to listen to anything else in the story. What is changing? Because that's where all the money is made. Microsoft almost died. A lot of people, Microsoft is a huge powerhouse, one of the most, second most valuable company in the world. But when we moved from, physical discs and physical media to the internet, and we moved from you pay for the software to you license the software, they almost, and the transition to cloud, they almost didn't make that transition well. And Microsoft almost went away, right? During that tumultuous change, guess who took market share? Salesforce, Amazon, large service providers, in a market that Microsoft had previously owned forever and never thought they would have to abdicate. But as a cloud change happened, that's where huge money was made. So what is it? What is the transition to cloud? And people are like, oh, nothing's changed in my industry. Not possible.
No, it's totally not possible.
Right? Not possible. The Billy Joel song? See, there's another thing. We could be playing the Billy Joel song, but we're not hooked up. We didn't start the fire, right? And do you know the lyrics to it, Ben? Can you just sing it to us? You have a good voice.
We didn't start the fire. It's always burning since the world's been turning. Go ahead. You can finish.
No, I'm following you. I'm mumbling.
All right.
So, if you rewrite that song for like today, the grain in Ukraine, war with Russia. China is making allegiance with Russia. The cost of gas in Southern California is $7. You're having to transition from ICE to electric vehicles. Southern Californians are looking for energy independence because it's a 71 cent kilowatt hour, where, in North Dakota, it's a 21 cent kilowatt hour. The Republicans and the Democrats can't seem to, decide on what color jelly beans should be served in the Senate. We have Trump going to jail. So for the first time, we may put I'm not even like an economist or very studious of the papers, but I could go on with macroeconomic change, for the next hour, right? How the mortgage rates are 7%. Nobody wants to sell their house in Southern California, so you can buy a perfectly good $2 million house in my neighborhood for $5 million because there's no inventory. It makes no sense. The mortgage industry is scratching the head. Where they're going to go is the Treasury is unsure of where they're going to take rate lifts. We've got weird economic imbalance with the UK and the pound, which should be weaker, but it's stronger than us. We've got trade imbalances with China as China starts to implode their real estate. Their largest real estate companies have been selling a sham for 3 or 4 years. That's they're defaulting on debt. We have the Taiwan issue. If we're not strong and I don't know. I don't even read the news and I know all that. It's not possible in your industry. Something is not changing.
Over years, you've had many clients focused on commercial real estate. Isn't that the case? I mean, how much have you done in commercial real estate in your career?
So I've looked in the eyes of individual investors writing $250,000 to $1 million checks and raised $400 million into commercial real estate directly across the table. Hey, Mrs. Jones, listen, I really feel like this is the right asset for you. Of all the people that I have available to come into the deal, I want to make sure there's an allocation for you, right? I'll work with you to some degree, right? As long as you're working with me. But if I feel there's any resistance, I'm out. What should we be doing together to get you in here? So I've done that, or some version of that, to the tune of $400 million. And then on the other side of that, I've been involved with $600 million of the debt. So that's the equity side, $600 million of the debt side, with, whether it was Bear Stearns or Bank of America, JP Morgan, private debt. So that's kind of $1 billion of commercial real estate. Listen, there's people like Ben who are going to do $1 billion of commercial real estate between now and, end of day Friday. So it's not like a huge number, but I think dealing directly with individual investors and asking for checks on that kind of volume taught me huge lessons. So for example, now I'm out on a $70 million deal that's mine, right? And I'm funding the sort of odd $30 million from individual investors and $60 million in debt. And so that's my deal. So overall, $1.5 billion, $1 billion. So not huge numbers, but I did it manually without any support or AI backing me up.
That's fantastic. And you know what? That is an accomplishment. Raising equity in any form, especially commercial real estate, is something you should be proud of. But let's do a little pitching. Let's show them your talent level. So we have the Alliance. We have the brand new Alliance Medical Property Fund. It's the hottest fund in the U.S., investing in medical properties and veterinary properties throughout the United States in high population growth areas and great healthcare markets. And so I'm your investor. Okay. And do you want to know any information about the fund, or are you just going to pitch me and close me? It's up to you.
So just for context, I'm selling the Alliance Fund to you?
Yes, I'm your investor. I'm in front of you. You're going to pitch me. You're going to close me. I want everyone to see how you do it live, because I think it's great learning to see a live example. And so let's take our new fund, the Alliance Medical Property Fund, and you can show everyone how you work with investors and your experience in commercial real estate, as well as any industry you've done where you pitch. So do you want any background, any facts that help you? Okay, here we go.
I do not need anything.
You have the floor. I'm Ben Reinberg. I am your accredited investor right in front of you.
Hey, Ben, if you're anything like me, and I'm super interested to learn more about your family, and as we work together, a little bit more, but, I live in Southern California. I've got a 9-year-old. He plays hockey. He gets injured all the time. My wife and I are, 50 plus. And so we have to interact with the medical system, right? Like I've CrossFit, I got a spine surgery, right? I call my insurance, right? And said, hey, I got to go for spine surgery. And they go, great, let us know how it goes, right? I go, where do I send the bills, right? And they're like, keep the bills to yourself. I'm like, no, it's $70,000. They're like, great, if you want the spine surgery, you pay for it. And so really the massive tectonic change you've seen in American healthcare is it's moved to cash pay, right? So unless you just are going to a doctor and they're giving you a pill, giving you an injection, or doing some medical procedure that is 100% stock, off the shelf, no questions asked, that's the fit for you, and you need any kind of custom treatment that insurance believes is, not an absolute necessity based on your insurance plan, you're going to pay for it yourself. So 30%, so a third of our economy is medical care, right? So we have a $21 trillion economy. The medical healthcare is about $6 trillion industry. About $2 trillion of that is moving towards cash pay or to cash pay, right? So what happens when you move to cash pay? It turns you doctors into entrepreneurs, right? So the doctors are moving out of the hospitals, moving out of the ASCs, ambulatory medical centers, into their own micro offices. Literally, I just had there's no dental insurance, that I know of. So I just had an implant, right? And my dental surgeon built herself a nice little office in Encinitas. She was telling me, she put $1 million into it. The bank loaned her $500,000, and she built her little entrepreneurial business that is cash pay. So what you are seeing is, because of this shift in American culture, in our society that is $2 billion big into $2 to $3 trillion big, you're seeing doctors, if they want to make any money at all, become entrepreneurs. And guess what happens when they want to become an entrepreneur? They need an office. And that market is exploding. And if you look at the United States and you say, okay, where are the most entrepreneurial physicians and doctors? What is the most entrepreneurial state, and where is the most highest functioning capital market? It's California. So our fund is functioning in the fastest changing environment, the fastest shift in the world's largest economy of doctors to entrepreneurs. And we're at the center of it, funding and acquiring and selling units to those doctors and physicians so they can run their business and making money doing that process. And that's what we're up to. And so we have a new mechanism for creating 20 to 25% IRRs with high certainty, high sustainable, high alpha, low fail rate, with consistency, with a very small team, high margin, low cost, high volume, and we're the absolute forefront. We've done this 257 times, pushed, right? And now, I can tell you, the first 5 times we did it, we didn't talk to you and ask, we did it with my money. Right. I didn't, we didn't ask anybody to come in. I didn't even call my grandmother. I did it with my own personal money. Right. By the 10th time we'd done it, I'd made a couple $1 million, and I started to continue put my money in, and my team built up. When we started getting to about 20 people, we realized we have access for the market window we're in to be able to do about 30 of these a year. And my money does about 10. Right, in the risk profile that I'm comfortable with. So every deal, my money isn't alongside people, right? But we're professionalizing our investor base. Now, listen, but because we've done so many of these and we know so many banks, I can go to Silicon Valley, go up Sand Hill Road, and take 30 meetings tomorrow and talk to institutions about funding these deals, right? That is not something I'm interested in, is taking the deals that I do for physicians who are providing healthcare in the communities I live in, and then having fucking hedge funds, sorry for the language, ma'am, but I'm passionate about this, have hedge funds own the healthcare in our communities. So we've said to ourselves, we put a big red X over Sand Hill Road, the Chicago Mercantile Exchange, and anything that looks like Manhattan, New York City, and said any investor that comes out of there, it's a no, right? And so what we're doing is we're talking to investors that we love, people that we want to work with, people who this high certainty 20% IRR alpha is really meaningful. They want to be part of our family, and we see ourselves working with them for 1 year, 2 year, 3 year, 5 years, right? So for example, one of my partners, just my capital partners, he's been in with me for 15 years, right? Over that time, we've created $16-17 million of IRR. Look, he put capital at risk. It was not magical. We worked hard. There were some ups and downs, but we've created almost $16 million of returns for him. We consider him a family member. We've done Thanksgivings together. That's how we run their business. There's an investor that we have that doesn't know about my son, and his wins at the hockey game, whether he wins or lose, and keeps track of him on Instagram. This is a family. And so what I'm trying to understand here in this meeting is, are we right for each other? Like, we know we generate the returns. We know we have access to the market. We know we understand this better than anyone else. What I'm really trying to understand is, should we open the door a little bit further and let you in to our family? Can you tell me a little bit about yourself, Ben, as an investor?
Well, I like safe and secure returns with upside. I love tax benefits, Oren. So if you could provide me tax benefits in the deals, that's something very important to me. I want to make sure that I can create wealth and a legacy for my family. So, I'm an investor who will put, over 7 figures into your fund. And I want to make sure that you guys are a good fiduciary for my capital. So how are you going to report to me, and how do you communicate? And that's important to me. So I've been around, I've invested in other type of assets, multifamily, industrial, self-storage, and I like diversification. Diversification is very important to me, Oren. So
Ben, I don't mean to interrupt you, but like, you're just reading me the real estate investor Bible. Mm-hmm. Okay. You're going down and I can see you're a professionalized investor. You've done this before. What you're doing is you're taking the junior analyst checklist, right? And just, reading off the underwriting in an asset. And also, like, I think it's important for me, every investor and sponsor relationship hits some point where there's a multiple contusion or some confusion or a lack of returns. So for example, in 2008, right, we, in order to save some assets, we had to go to the investors and we had to say, listen, this asset is intended to generate an 8.1% cash on cash yield for you. We have to this year return that to zero, set that to zero so we can reprice the debt. The debt is never going to reprice if we're still making distributions. So, I went to our investor base and, 9 out of the 10 investors we picked correctly. And they're like, yeah, of course. Like, reset us to zero for a year, reset the debt, right? Get the asset spun back up, and let's look at the long. One of them was like, hey, I'm not going to do it. We need unanimous sign off. So I learned there the importance of, really saying there is going to come to some point in time where we are going to have a disagreement. Yet we are still invested together. We'll start operating the asset together, and we still have to speak like directly to each other, but still be in business, hot and bothered, still be in business together and not get in a fluster. So I'm not trying to understand, like, gain an understanding of, can you read me the junior analyst checklist on an asset? Yeah. So everything you mentioned, we do that to 3x. I have 28 people, 14 of them are in compliance and reporting, right? So what I would suggest we do, right, is we get to an agreement here. Oren, I love you. And I haven't heard that yet. Right. So I don't know, like, how we would get together until you said, Oren, I love the way you do deals. I love your underwriting, and I love your investment thesis. So until, like, we get there,
Oren, I am really crazy about you, brother.
Great. So that's where I want to be. That's where I want to be. And I agree. I love you too. All right. So we've got that agreement. Listen, and I don't want to be dismissive of your junior analyst checklist. Like, you have it for a reason. Here's what I'm going to do. And I think this makes sense. You agree in principle, hey, I'm in. Okay. Oh, and one of the reasons I wanted to say, like, we have to be careful. So you're in real estate and I'm in real estate. And that makes us silver-tongued devils. And we're selling each other right now. Right. And so it's important that we are able to have direct conversation. So when you say, hey, I can bring you multiple 7-figure checks, like, not to be rude, Ben, but like, fuck off. Like, I have plenty of access to capital. I'm trying to find individuals that are not going to hold their capital base over me, try and get a deal, ankle bite, negotiate, because maybe someday they can bring me 7 figures. Let's focus on a $500,000. That's way below your threshold, right? And let's do some work together. Let's generate a return. Let's say we enjoy working together. And we want to do more together and then increase. And I don't know, 2-3 years from now, let's get to those 7 figures. But I don't want to be bothered thinking about that. I do not have any limitation of access to capital. What I have a limitation of is people I love and enjoy working with and like spending time with. For me, people say, don't do business with your friends, right? And I'm like, who else would I want to do business with? So I believe we do this right. We put in, we generate a return, you put a small amount of capital, we manage the risk, we do the reporting you love, and we grow together and we'll become both friends and business partners. That's what I'm looking for, right? If you're, if something else tickles your fancy, that's fine. That's all we do. Like, I don't make pizza, don't make websites. I don't have a different kind of investing style. So if you love the way we do it, we'll be together for 15 years until, I can't do this anymore. But what I was going to say is, I think you do have a lot of legitimate questions. What is the reporting? What is the track record? What third party has measured the track record? Have we sequestered the track record with our losers outside of it? Who do we use for third party reporting? What oversight do we have? Do we have any pending lawsuits? Are any of the assets in litigation? What has been our cycle time on assets? Sure, we do a 20% IRR, but did we promise a 30% IRR? Or did we beat a 15%? Like, there's lots of those questions to be answered. What I would say is, let's hear in this meeting, and by the way, we've been doing this for an hour. We got a few minutes left. In this meeting, what I think we can accomplish is this. Ben, I think, notwithstanding some of the things we talked about here, you're a fit for the way I like to work. Your capital base makes sense for what we're doing. And I think our investment thesis is straight up the middle for how you want to deploy capital, right? And so let's agree to agree. Right? You're in at a small amount. Let's call it, $500,000, $500,000 check is a good starting point with us. All right. And if you agree, like, hey, that's a great starting point. And we, I'll go tell my team, Ben is in, but he's going to come down to the office and he wants to go through the reporting infrastructure. If you do that and you don't like what you're seeing, then opt out. Right. And we'll separate and say, we spent some time together. We couldn't put it together exactly as we wanted to. Hail fellow, well met. Let's come around on the next one, right? My instincts are like, our reporting is plain vanilla. Like, you probably recognize our CFO. You recognize at least the schools and the institutions that our reporting guys came from. You'll take one, you've got all these questions and you'll take one look at our asset report and you go, yeah, that's like how it's done. And you'll love it. So unless there's something that, I'm not tracking completely here, let's call that the ticket size. Let me get you the paperwork. We'll get you down to the office. You'll talk to our reporting guys and we'll begin the first step of a big adventure. But in your mind, what should we be doing together?
Well, in my mind, I think we should get started. Get me the subscription agreement, send me the PPM, let me take a look at it. I agree. Let's start with $500,000. By the way, Mr. Klaff, if I'm happy after, and this is a fund and you have room for the fund, and I want to increase, say, double my investment to $1 million, you said it's a call fund, so I'm not writing a check right away. It's per acquisition. You're going to allocate for me. Would that work? Is that okay?
What I'd love to do is just let's form our relationship. Let's do it at this level and try and develop a working relationship and try and expand it. That's what I'd love to do, and I think would make us the most happy. Ben, here you go. Press hard. 5th copy's yours.
Well said.
And hey, don't use that pen. Don't use that pen. Use the good pen. Use the good pen. Here, I had.
What is going on here? No DocuSign, Mr. Klaff? What's happening?
I had one of these
modern age of technology here.
I had one of these guys from the, like prior generation of deal closing, right? He's like, hey, and he came to one of our events and he's like, yeah, I want to teach you one of my best closers. I'm like, oh, I'm excited, because we have you can hear like, it's a very nuanced push-pull, FOMO, relationship-driven. I mean, I really pushed you in a corner there, right? And then gave you like one door to squirt out through. But he, I expected him to come up with like this very nuanced. He's like, I got this great close to teach you, right? And he's like, Oren, here's the agreement. Don't use that pen. Use this one. It's the good pen.
I love that. I'm gonna use that. I'm using that. But next time, I don't get to use it much, but I'm definitely now. I'm all energized. I want to raise equity now. I'm just fired up from talking about it. So, it's funny because I've met a lot of former iBankers in my career, and very few are charismatic and great at pitching. I'm curious where you believe your skills really developed. Like, at what point in your life, in your career, were you really into telling stories? Like, did this come from when you were a kid? Like, how did this all develop? The skill set you have?
I think that's great. So, my parents are from South Africa.
Okay.
And if you've met South Africans, they're just like they have these rich accents.
Mm-hmm.
They have this this style. Like Ben, go ahead and ask me what the secret of great comedy is. Just go ahead and ask me.
What is the secret of great comedy?
The South Africans are just these rich storytellers, right? And they have this beautiful accent you can listen to forever. And their sense of timing and pacing and humor is wonderful. So I grew up, I grew up in a family of storytellers, and then I think to combine that with my like triple A personality, I will be able to get myself in trouble like all the time. So you combine like this storytelling, dynamic. And my mom's a clinical psychologist. My dad is a sociologist and demographer. So they're academics, but in the social studies, wonderful storytellers come out of this culture, and there's rich stories out of the culture that they're in. You're mixing like Africa, Africans, lions, cities, and they grew up in a period where World War II, was just turning the corner. So they grew up with great humility, and they saved all of their money and all the things they could collect for the soldiers who would come in, to port the World War II soldiers. So they grew up in a very, very special, point of time in a community in Africa, and had this storytelling. And then again, in fucking trouble all the time. So I'd use that storytelling ability to great effect. And so I think and no one's ever asked me that before, but that's my free personal psychological analysis of myself, is those things came together. And the reason I say that is like, as I learned the effectiveness of storytelling to create results for myself, I like doubled down on it. And then I started thinking about, what is a story architecture that works? And I will share this with you. Like, most of the people who come in and tell me, and they're presenting a deal and they go, oh, I got a great story for you. Right. I'm like, well, first of all, it's a great story. Like, let me just decide if it's a great story. Just tell the fucking story. Right. And I'll figure it out if it's great. All right. And the second thing is, they'll go off about, and this just, it doesn't have a basic story architecture, which is a beginning, an inciting incident, the need to go get something, which is a middle, and an end. The thing that was needed to go gotten was found, and everybody was happy, and the dangers were narrowly missed. So the stories, whether they're 2 minutes or 20 minutes, don't have a beginning, a middle, and an end with a basic story architecture. So once I learned, and I think you alluded to it, to create a basic story architecture, I was able to talk to girls. And when you can talk to girls, telling stories, then immediately bakes into your DNA the power and the strength of narrative composition. And then when you take narrative composition to the deal making world, and now I can talk to girls, and now I can get money, and now I can close deals, and you understand that just giving people data and economics about whatever it is you're doing and having them assemble the story in their mind is a very low quality experience for the buyer and difficult for them to do and has low conversion rates. When you assemble the story for them and has a beginning, middle, and end and has characters, and those characters have motivations and they can understand the motivations and they can put the deal in context of the human experience, then the conversion rate goes up, deal size goes up, cycle time goes down, and happiness gets spread all over your life. So that's how I think storytelling affected me and where it came from.
Well, let's talk about that. I mean, what is your favorite part about coaching others? I mean, you do a lot of coaching, become better at pitching. What is the profile of your favorite kind of students that you coach?
So what we have, my writing partner and I, we have a thing we put up on the big screen behind me. We'll put up one of our long form, sales pages for equity, or we'll put up one of our decks, right? And I'll pick somebody out of the audience, whether it's digital or here, and I go, take a look at this writing. And I could share this, your thing. Does this thing let me share screen? Anyway, I go, take a look at this right now. How much time do you think I have in this deck? Right? And they're like, oh, you're super smart. I'll be 20 hours. Right? And I'm like, at you, how much time do you think I have writing this deck? Right? And they're like, man, I bet you have 15 hours in it. Right? I'm like, all right, 300 hours. And I know what I'm doing. I have all kinds of decks to pull from. I work in this industry and I have 300 hours in this pitch. So you're going to walk in here and go, hey, I put this together. Can you look at it and help me out? And you have 20 minutes in it. Get the fuck out of here. Right. And so people who hear that and see that go, wow, Oren Klaff, Jake Hoffberg, people who do this professionally for 20 years and have to pitch a deal are putting 300 hours into it. And I put 2 hours into my deck. And now they go, now there's a fork in the road, right? Either this is too heavy for me to deal with, or I now know where I have to go and what I have to do. And Ben, I'll give you, are you watching this show, Quarterback on Netflix?
No, I've never, I might have to write that down. Is it?
It's awesome. It's 8 episodes.
I'm from Chicago. I just got done watching The Bear, which is a really good show.
So the Quarterback.
I do like Hard Knocks, though.
Hard Knocks is awesome. The reason I recommend Quarterback is because Kirk Cousins, the quarterback for the Vikings.
Yeah, is he on the Redskins or something, or is he retired?
No, he's the Vikings. He was on the Commanders before.
That's right. They're the Commanders. I can't keep track of these name changes.
Yeah, the upside down equal sign backwards 3 / asterisk.
Sorry, team. Let's change the name to the Commanders. Keep going.
So Kirk Cousins, and there's an episode where they have to learn the play calling, the shot calling, the play, right? It's awesome. I think it's episode 4. I cannot recommend it enough because it is a direct parallel for the world you and I live in, right? So Kirk Cousins has to go set 25, x-axis, Oklahoma, right wing, swing left, 0-9, nachos, Cheetos, porridge, Saturn, Mars, Y, functioning, zip line, 0, set, hike, right? And that means something to everybody. Right? And that's not one of his plays. That's one of 100 plays that he has to know, right? And they show him and he's driving home and he's set left, Y-axis. No, it's Z-axis, zipper right. Fuck, I got to get this. And every free moment, he's studying these play calls. And so they turn the camera on the coach and the coach goes, I love this. He goes, for people who think Kirk Cousins is stays in shape, throws a ball, shows up here on Sunday, calls a couple plays, looks for an open receiver, they have no idea what an NFL quarterback does. And that resonated with me so much because people who are trying to raise money and come in here and see me doing it, right? When I actually show them behind the scenes and I'm good at it and I can pitch your deal better than you can in most cases, right? Why? Because like I'm doing the work, and it's not like a little bit of work. It's a lot of work, but the benefits are enormous. So I have companies that I'm coaching or helping out, and they're doing a little bit of work and they're struggling to raise capital. I put together my own deal. Happy to share with you the pitch deck next time we get together. Right? I couldn't even get the security document done, and people are trying to shove money in it. Right? I'm like, hey, we want to wire $5 million. I'm like, I don't have a functioning security document. Right? And so I had to switch law firms to, find somebody who could put together a securities document so I could actually take the capital in. And I'm like, you guys have been at this for 3 months. You watched me. Like, I'm working on your stuff and I'm working on my stuff, right? You watched me on every call we have. I read you in on what I'm doing, how I'm thinking about it on my deal, right? And then I opened my deal up. You watched me take in $10 million in the time that you have not been able to tie your shoelaces. That is not me. That is you, the student. So I think the question is, what makes a great student? And the answer was, I don't know, but somewhere in there was an answer.
well, here, let's expand on what you just said. What's the gap in that scenario with the student? Like, so you raised 10 million. Obviously, like you and I, we have a lot of experience. We've ridden the bike plenty of times. It's a different mindset, but what's that gap? So
you met over there, Camden?
Yes. So
Camden walked in here. So I'm interviewing for a job, right? People come in, they're like, what are the benefits? What are the health benefits? What time do you start? Do I get lunch? Like, what are your, what's the PTO, right? Camden walks in here and goes, motherfucker, if you hire me, I'll never leave. Like, I won't, this is the only thing I want to do. I don't even care if you pay me. I just want to work here. This is amazing.
Love
right? That. And we had all these other positions open, right? And we had candidates, and we're like, yeah, I like that candidate, and we're extending job offers and everything. I'm like, everybody, none of all job offers until we meet people. Like, that's the right answer, right? I don't care. Let's work something out as long as it's fair. Let's go. I know we're going to make millions together. Get me in here, and we're going to figure it out. I love this, right? That is the gap between people are going, what's PTO and how do the healthcare benefits work, right? And so I'm telling people like, let me tell you how healthcare benefits work, right? Somebody pays for it. I pay for it or you pay for it. But like, somebody pays for healthcare, it doesn't magically show up, right? So if I pay for it, guess what you make? Less, right?
That's right.
If you pay for it, right? Guess what you make? More. Like, I don't care. Right. But don't focus on the healthcare benefit. It's just a function of economics. Right. Focus on what we can create here together.
That's right.
That's a good point.
How are you going to add value?
Yeah. So, and by the way, this is not, we are coastal California. Like, you could walk to go surfing from here. We have 8 heavy jets, 400 yards from here at Palomar Airport. There's a 40-foot screen wall there. There's a Lamborghini Performante. You can't see it, but I would say 18 feet that way. The company car is a Lamborghini Performante. And so it's not exactly like hardship working here. And so we want people, both clients and the people we work with, go, this is amazing. How do we spend as much time together as possible and show me what to do? And I cannot believe the opportunity to get inside of this and work with, maybe the world's best person at this. Let's get going, right? Open checkbook. Let me know how much you want. I don't care. Let's go make this happen. That's the people who succeed, right?
That's right.
People who are like, oh, it's so hard. And, the kids go to bed and then I don't have much time. And, I'm like, what? Great. That wheelbarrow of problems that you just wheeled up to my front door and dumped off, we're filling it back up and driving it over to your house and dumping it back on your doorstep. Those are your problems and you get to keep them.
Yeah, it's tough out there to find great employees. I totally agree with you. You want those people with the right mindset, buck stops here mentality, and people that are go-getters, that are aggressive. That's what I said to my son, Joey. He just graduated from USC. He's in the blockchain business. I said, look, Joey, you're the first one in, last one out. That's how it's got to be. He goes, I get it, Dad. I see what you do. because you know what? That's what you want. You want someone where these younger guys that come in, men and women into your company, you want them to come in and dazzle you and say, look, I'm here to work. I know that if I add value and I show you I'm competent, I'm reliable and dependable, the money will flow. And I tell it to employees, and the great employees in this world, for any employer, realize that money will flow to you when you have those great habits and you're dependable and your words mean something and you're honest and you got great values. Money will follow great behavior. It's always been the case. And it's something everyone should listen to.
I think I told you, my son plays hockey, and I tape his stick and then I write something on the stick. Nobody else does it, right?
Oh, that's cool.
And so, I'll always write something like, skate with me, you'll never skate alone. Right?
Oh, I like that.
And teams win.
Mm-hmm.
And now it's a thing, like both the other teams and our team, everyone's like, yeah, what's on Asher's stick, this weekend? And that has really sunk into him, right? It's like, hey, skate with me, you'll never skate alone. I don't go coast to coast, right? I pass. And so we took him to Denmark at the end of August. So August 15th to the 22nd or whatever. We took him to Denmark for a hockey camp. And where, Swedish, Danish coaches come in, and there's players from all over Europe, and Esbjerg, Denmark, where there's a pro hockey team there. And it's an 8-day camp. We watch them 3 hours a day on the ice, a couple hours on dry land. They get a lunch, and then they play some other hybrid sport, just to have some fun. So it's 8 days. The final day is a skills competition. And I'm watching it, and he comes off the ice. I'm like, he's 9 years old. I'm like, that is horrible. Right? I can't believe it. Like, you're shooting 42 mile an hour pucks. You're messing around the ice, grabbing other kids' sticks, not skating to the echo of the whistle. And my wife is like, hey man, like, can you just go for a walk and calm it down? Right. Yeah. And I'm like, you know better than that. So I go for a walk, right, to cool down. I didn't notice, but I missed the awards ceremony. I missed the awards ceremony. And so my son wins player of the entire camp, right?
Oh God.
Wins player of the camp. And that is like the hardest working, hardest skating, most passing, showing up early, getting on the ice, doing what the coaches say. Because they got a bunch of rogue players, from Sweden and Denmark and everything. We won player of the camp. So it shows two things, that I won Dad of the Year again. Thank you. Really appreciate that. But the other thing I think it shows is like how much that sinks in, right? From the parent level, from the teammate level, is like, hey, let's play from values first, and let's be a teammate first. Teams win. You skate with me, I got your back, you got mine, and we'll play together. And that somehow sunk into his tiny one chromosome brain, dinosaur brain, and is starting to create magic there on the ice. Because he's not the best player, like the fastest player, the best player, the hardest shot. But best player, I think, is what we were happy to achieve. But the story has an interesting twist. So it would just create magic. And this is what I want to share with people. Like, do it right, and it'll create magic. So I have a picture. I showed it to Camden. He can validate it if you want to, take out your reporting due diligence checklist. But I did show him the photo. So about
wait, you already got me as an investor. Just you got to stop, right?
That's a good point.
Yes.
So
quit it, kid.
About 45 days ago, the 1980s USA versus USSR, Miracle on Ice.
That was one of the best sporting events. I was 10 years old.
So we have a photo here that one of our clients gave it of that 1980s USA team.
Mm-hmm.
And they gave it to Asher because they follow him on Instagram, or my Instagram about him. They gave it to him at an event. Every team member signed of the 1980s team. And then we have in our living room, which, my wife does not like, the super checks, the hockey bubble game of that 1980s. So they have the 1980s USA versus USSR super check. So we play hockey every morning, and I'm USSR because he always takes USA. And then I got him a book, and he was reading a Miracle I forget what it's called, like The Miracle, right?
Miracle on Ice. Or
what was it called? Real Miracle on Ice, because it was the book by Mike Eruzione, who was the captain of the team.
Right.
Right. And so I have a photo of him that I sent, that I took of him reading the book, and I sent it to a friend of mine, and he goes, "Oh, I know Mike Eruzione." Right. He goes, how about we bring him out to an event, right? We have him speak at the event, and then you and Asher can go out to dinner with Mike Eruzione and, and have that experience of going out with the team. So I think the magic will happen if you put the time and the energy, like, hey, this is, but by the way, I mean, I think we started with very counterintuitive stuff about the crocodile brain and the midbrain.
I think we're landing the plane. Universe.
We're landing the plane on like, hey, work hard, put in the hours, be on a teamwork. Like, and then in the final analysis, is what I would say, like, everything you can learn really about doing this stuff, you could just find in a hockey locker room. Play on a team, do your best, listen to the coach, skate hard, respect the other team, take care of your equipment, take care of the facility. This is a game, not a war. They're just kids. So those are the 10 like points of light you would find in a hockey locker room, but also you can be your life. And then you can fill in with the stuff that Ben tells you to do. And now you've got all the mechanisms to make it happen.
Well said. Well said. So what would you say your biggest risks in your career you've taken, personal or financial, that maybe you haven't shared with people?
With my partner, who I learned all this stuff from, right? Like I went a year, working on a few deals. They collapsed. He didn't pay anything, all expenses. Like I lived in West Hollywood, in a house, and I went a year with zero income, right? So I funded all of my expenses, all of my travel, all of my living expenses, on the notion that a real estate deal was going to close. And I didn't really understand how mercurial and low certainty real estate closings are, and I think I was down to like whatever, $8,000, and we had a closing, and $250,000, wired to my account. And I was like, holy shit, that was like scraping. So the biggest risk was, I would summarize that as listening to a real estate guy promise and project of like when we're going to make money and when deals are going to close, and not understanding like how fragile, how thin a spider web and fragile actual deal closings really are in commercial real estate.
No question. You could have deals that die 3 times, they get revamped. You could have extending of due diligence. We just had that this morning, a deal that got extended on a sale. It just
great. Can I get in on it?
You should have bought this deal. We're selling it at 9 cap. It was really juicy, but we'll talk. I just lost my train of thought. Who's running the show? You or me? Come on. Let me.
Hey, Ben, let me know when you want to take your show back over. I can give it back to you.
Please. I'm going to grab the wheel right now.
Yeah.
So for my listeners who enjoyed this, and by the way, we need you back on the show like once a quarter. Just great knowledge, and really grateful to have you on. And so for our listeners who enjoyed our conversation, Oren, and want to learn more about your teachings and about you, where do you suggest they start to come into your universe?
So what I would do is I would sign this, press hard. The 5th copy is yours for all of your listeners. No,
do you provide the pen?
Don't use that pen. Don't use that pen. Okay. Ben, use the good one. Use the good one. Jump over to pitchanything.com and subscribe to that newsletter. The training part of our business is like, we give everything away, right? We don't have like, you don't sign up for courses and on, like, we have all the online stuff. We give it all away to the extent we can. We make money on deals, right? I am not a real estate course seller guru. We make money when we close deals. So sign up for the Pitch Anything playbook at pitchanything.com. The newsletter, I literally talk about what we're doing, how we're doing it, why we're doing it, how we're getting leverage in the deal. I am on a path, and I'm on an announced, committed path to grow my net worth by $100 million in the next 3 years. And I'm just laying down, open book, what I'm doing to make that happen. And I'm inviting people to come along with me. And so if you want to follow that journey, or you want to be part of that journey, jump over to pitchanything.com and we'll try and take you as far as you're willing to go. But definitely, I'm not willing to work on your life harder than you will. So let's see what you're made of, because I already know like what I'm capable of.
It's well said, and thank you. And I have the book right here, and I will tell everyone, continue to grow. Okay, I've been at it for almost 3 decades. I've raised hundreds of millions of dollars, done billions of dollars a deal, and I still continue to learn. I keep 100%. I keep this close to my nightstand every night. So it reminds me that I have to continue to learn and get better, and I'm not perfect, and technology is changing, and my pitch has to change, and generations are changing, and I'm selling to different people, and I have to train my staff as well. So
Ben,
his book. Yes.
Allow me, indulge me 30 seconds.
Wait, hold on, you're killing my pitch for a book.
Sorry. Yeah. I could keep quiet. All right. Thank you.
I think your publisher wants this too.
Yeah. Okay, great. Okay. I'm listening.
I have said this on different shows where I've been a guest, that this is a wonderful book to really understand what's behind pitching. And I encourage everyone. I'm a big believer in this book. Like I said, it's in my bedroom. It reminds me, it says to me every day that keep learning, keep growing. And someone like Oren is a great person to follow, because that's his mindset. It's growth. It's how do I get better? How do I improve people? How do I impact and give back to people as well? Just like I think it's why we connected and the universe brought us together on this show. So, okay, I will give you back the wheel to our.
No, thank you for saying that.
Is this the Ben Reinberg, Oren Klaff, I Own It show? Is that where we're rebranding this thing?
Yeah, right. No, that's wrong, Ben. I disagree with what you said. It's
okay.
We own it. We own it.
We own it. Okay, we own it.
Yeah,
there we go.
We own it.
All right.
So, just in the final analysis, I just want to tell you something that happened to me around the book.
Okay.
So I have to buy all kinds of sales books and raising capital books, because I need to know like what's out there, and the publisher sends me books. I have to read. I just stay current, and maybe somebody else has like a huge breakthrough, on top of mine or whatever. So, I buy this book, and it's this like tiny little, almost self-published, book on sales, and right. And by a guy who's not like a big hedge fund manager, like small time guy, and just telling about his right. And I'm reading it. I was just expecting it to be like typical door knocking sales guy stuff. And I'm like, I fucking love this book. Like I don't know, like it's amazing. This is like a tiny little book nobody knows about. I just bought it because I bumped into it. I have to buy everything. Excuse me. And I'm reading it. I'm like, this is so insightful. And like these ideas, like I'm writing stuff down and highlighting. I'm like, these are amazing new ideas in sales and capital raising. Like this guy's a genius. I'm like, I love this book. I'm going to recommend it to people. And I forget what it was called, like, putting your best foot forward in sales or whatever. Right. And I get to the end of it. He goes, thank you to Oren Klaff, the author of Pitch Anything, from which I pulled all of the ideas in this book. I'm like, oh, okay. Yeah. So.
There you go. See, you're in.
So I come around. The things in Pitch Anything are they are part of the psychological moment in time that we're in our culture. So to understand, like I read it, it's not this happened to me, and this is one time I did this, and it's not. There's no motivation in the book. I don't do motivation. I have a good friendship with Tony Robbins, except we don't like each other because he does motivation and I don't believe in motivation, right? I believe in execution. And so we are totally different spectrum of the universe. I do not do motivation. So the book, I go back and read it as a reminder of like the patterns of behavior that create psychological openings for raising capital in the culture and economy that we're in. And that's really what it's about. And so when I saw those ideas in someone else's writing, like I knew I loved them because I know subconsciously those are things that work.
How long did it take you to write this book, by the way? I always want to ask you that.
So I think the book came out. That book came out 2010. Flip the Script came out 2018.
Right.
And so if Pitch Anything is like pulling you into a new world of ways that you never even like, my God, I didn't even know this was possible. Then Flip the Script is how to do things in that new world. So Pitch Anything pulls you into Narnia, and then Flip the Script tells you how to survive in Narnia.
Got it. Well, you heard it here from the man. Definitely pick up his books. Outstanding, and I know you will enjoy them and you'll learn a lot, because if you're out there raising equity, you have to continue to grow and continue to learn. Things change, environment changes, investors change, and we're dealing with younger generations and the internet and raising capital as well. Are you ready to wrap up with our 3 questions? I've been waiting for you to come on, my friend. You ready?
I'm ready.
Okay.
Who's 3? Am I asking you questions?
No. This is not the I Own It show yet.
Oh,
it's Ben Reinberg.
okay.
Stay with me. I got the wheel. All right. So,
okay.
You're in my studio in Laguna Beach. By the way, you're more than welcome to come down anytime. And I say, Oren, get on the couch, kick off your shoes, lay down. How old are you now?
Old enough to know not to answer that question.
No, you got to answer that question. It's required from all our guests, even the women.
Yeah, even the women. Yeah, when I used to be a woman, I would answer that question. I'm north of 50 for sure.
All right. Well, you look great for north of 50. I am as well. I'm 53. So
yeah, we're the same age.
Exactly. So you're 53 years old. Go back to when you were 16. Okay. Remember, we grew up in the 70s and the 80s, and technology wasn't as prevalent. And now, with the experience and knowledge you have now, what advice would you share with yourself at 16 years old if you can go back and talk to yourself, knowing what you know now?
Plastics. Invest in plastics. No, that's from Marathon Man.
Oh, okay. I was wondering. I was like,
God,
that sounds familiar.
Yeah, plastics. Yeah, there's one thing I would tell myself, and this is my personal psychological wound.
Sure.
Consistency. I hop from thing to thing. Like, I see people limited, in my opinion, talent, not a ton of creativity, low passion, but consistency just brought them, great success. And I would give something about 11 minutes, to generate results. And in minute 12, if it hadn't, shut that whole operation down and start something new. Consistency. Give it some time.
I love it. Great answer. Totally agree. Consistency is everything, because it's like you got to show up every day. By the way, do you have like a morning routine? If we're talking about consistency, like what's Oren Klaff's routine every day?
Yeah, I do. It's my routine is one word: family. So that's when I wake up, I have breakfast with the family, shoot hockey. I built a hockey rink on my house, so so my son could train without having to go somewhere else in the morning. And so I have the former coach of the Anaheim Ducks come in the morning, and I'm not a hockey player, but I built a hockey rink attached to my house, and then the coach comes and we can spend time together, and then we can have breakfast and we can talk about the training. I write my son before he wakes up in the morning. If I write him a note. So I take a picture from my phone, sometime in the last week, I print it out and I write something that happened in our life that's meaningful. We have thousands of them. Right. And so, absolutely. I do that because there's no really record of my childhood. Right. So I'm leaving a very detailed record of his childhood. We play hockey together. We, eat breakfast together. We spend time with my wife, and that can take, 6:30 to 9, is family. And then I'm free to run my day.
That's great. What do you do for your health? You look great. You look pretty healthy for a 50.
So I was in CrossFit or SEAL Fit, worked out with Navy SEALs for 5 or 6 years. I got a bad injury for that. So I am doing CrossFit Light with lots of focus on core, because you could do all that stuff without the core and you're just going to blow something up. So get your core right, and then you can load it. Otherwise, you're going to get an injury. So CrossFit Light, baby.
It's our last day on Earth, God forbid. It's just me and you, kid.
Yeah.
It's our last meal together. Your choice. What do we
And
eat?
your name Jessica Alba?
No, unfortunately. But we have a show. We own it, so I guess we know each other. But it's our hold on. It's our last day.
Wait, are your clothes on? I'm just trying to understand the question.
Yes, my clothes are on.
Okay, I got it.
And we're separated. We're just eating together.
Yeah, right.
That's it. No more. So it's our last meal on Earth, and it's your choice. What are we eating and what are we drinking?
Yeah, hamburger and an IPA. Like
nice.
a ground filet hamburger.
How do you eat your hamburgers? Because you're a West Coast guy. I'm a Midwestern Chicago guy. How do you eat your hamburger? What's on?
So well done. I'm not interested in rare. Yeah, ketchup, pickles, mustard, jalapenos, bacon.
Oh, baby!
Of sourdough bun.
Okay.
Of some fig jam.
Oh, wow.
Sweet potato fries on the side, lettuce, and probably some mayonnaise-free coleslaw. Right? And then,
just no arugula. What's with the arugula out here in California?
I hate that shit.
It just drives me nuts. I'm like, we cut that out of this that and cilantro.
Hey, if you don't like arugula or cilantro, we just spent a month in Italy and Denmark, right? Don't worry, you'll not see a vegetable for 40 days.
Oh, really? Okay.
It's like living on a ship, that's going from England to India, right, in the 1800s. Like you're not going to see a fruit or a vegetable for the entire time. You have awesome. Salted pork will be your and pasta will be your diet. So if you're if you don't like that arugula, I have an entire country for you to move to.
All right, perfect. Sign me up. So in our studio, we have a black door. We have a grand piano or a drum set, electric and acoustical guitars. And you're in studio with me. You can have any musician or band come in studio. They could be living or deceased to play us a song. Your choice. Who is walking through that door and playing us a song, and what song are they playing us?
Yeah, I don't think this is a confusing question at all. It's Rush, and they're playing Tom Sawyer.
Oh, wow.
So fantastic. I have a 9-year-old, as I mentioned 1,000 times. I have one kid, so I'm very...
Asher's getting a lot of pub on this show, I'll tell you. He is.
Did I tell you about Asher's t-shirt line?
I want to come up and skate with him.
Yeah, come up and skate with him. You can Asher's t-shirt line and his signature skates. He's we have him in for the Gatorade sponsorship, and he's got his own protein powder. So we're very family oriented. I don't commercialize my kid at all. It's just the t-shirts, protein powder, and Gatorade sponsorship. But other than that, I would not take advantage of my son. No, so I played Rush. Tom, he's into what's the song? What's down for what's up? WhatsApp. Wake up for down. Anyway, terrible music that the young kids like today, and I hate it. I played him Rush, Tom Sawyer, and he was he's played it 100 times, learned all the words, did like that. That is a song that when it came out, teens loved it. When we grew up, you and I are probably second generation Rush fans.
Yes.
Because that would have been 70s and you and I would have been 80s. 90s, there's a person who didn't like that music will stand the test of time, right? When people are going, Led Zeppelin, I don't know, kind of didn't age well, which might be 300 years from now. Rush, Tom Sawyer, people will be going, that's fucking fresh. I love that. Did that just come out?
Just like Spirit of the Radio and Neil Peart. That's why Neil Peart's probably one of the best drummers ever in the world. Just incredible. So Rush, Tom Sawyer, let's get after it. Well, thank you, my friend, for joining us today. And we appreciate it. If you are interested in listening to more episodes like this on the Ben Reinberg I Own It show, kick that right-hand button and click subscribe. Feel free to click the like button as much as possible, because as I say out in the ether, Oren, and everyone out there, let it go viral. To follow me, go to benreinberg.com. You can follow me on all the different social media platforms. And if you are an accredited investor and like to invest passively in commercial real estate, look no further. Go to alliancecgc.com. Feel free to log on. Check out our new fund, the Alliance Medical Property Fund, just like Oren got me to invest today. Thank you, Oren. And you can come in and invest with us, and we can build wealth and create a legacy for you and your family. Oren Klaff, thank you so much for joining us today. And everyone, hopefully you enjoyed this. We'll see you soon.
Thank you for listening to the I Own It podcast with Ben Reinberg. To hear our past episodes and connect with Ben, visit benreinberg.com.